Well, with the African Mining Congress having wrapped up here in Johannesburg just yesterday, where exploration, investment and development for miners, financiers and investors were put in the spotlight, we're getting the big picture on Africa's mining sector now and taking a look at possible future trends that are set to emerge. Erik Wandrag, Director at Capital 5, joins us now for that discussion. Thanks so much, Erik, for joining us this afternoon. Well, taking a look at the mining sector on the continent at the moment, what's your view on the status we currently hold in that regard in the global market, where our investment appeal has always been centered around the commodity story?
Absolutely, Alicia. I think probably the common themes that we've seen coming out over the last 3 years, and not just this last conference, but probably the last 4 conferences that have been held, has focused on exactly that, and particularly the pressures and the challenges around obtaining your license to operate within the African context, maintaining that license as well going forward. Access to capital, which is becoming a key issue, particularly around risks associated with the operations, and post-closure risks as well, that financiers tend to put a bit more of an emphasis on these days as well.
Yeah, but of course sustainability is the key issue that we're looking at here. I mean, one of the things that crops up very strongly on any investor's radar screen when it comes to Africa is the regulatory environment. I mean, we've got in Zimbabwe, as example, the indigenization policy at play, triggering much debate, threats of South Africa going down a nationalization route as well, and many other countries becoming more protectionist, if we can call it that, of their national assets, where the value that the local community reaps has become centre stage. What kind of discussion centred around this and the developments in that regard over the past week?
That actually is the key to most of unlocking the value in Africa. It's sometimes a bit of a Mexican standoff between governments and their mining organisations, where the mining organisations rely on governments to provide them with some of the supporting infrastructure, as well as utilities, particularly power and water, to enable them to explore some of these resources, but as well as transport and other port infrastructure, rail infrastructure that's required. At the same token, the companies also require some of those skills where there's a distinct lack of capacity. And at the same token, governments often look at mining companies to unlocking some of the local economic development issues within those countries as well. What has happened, I think, has been that governments, as custodian of some of the sustainability issues that you're talking about, has put that into regulations and legislation. Mining companies up to this stage have seen it as a bit of an onerous task, but what has happened is the de facto owners of those and gatekeepers of those standards are now the financiers. Yeah. With issues like the Equator Principles and Principles for Responsible Investment, it's actually becoming a very interesting proposition for mining companies to act in a sustainable manner to unlock some of that value.
With that being the case, I mean, the key question is, centers around accessing capital. So where exactly is capital expected to come from as we move forward?
Moving forward, most of your usual culprits in terms of the exchanges are there. Toronto is always up there. The JSE locally is starting to make a move to attract more miners to list on it. You'll see some movement in America and Europe and Australia obviously as well. But you see a lot more of your private sector investors moving into that space as well. There's an organisation under the Principles for Responsible Investment that actually manages $15 trillion of investment funds that is looking at moving into the mining space because of certain risk mitigatory issues that they can manage through some of the responsibilities. Well,
where we've got this financial landscape being influenced or influencing lender decisions right now, and as Chris Hart highlighted just a while ago, lending standards becoming pretty strict and becoming pretty tight. What do what's government's role, and what are these mining companies' roles to collaboratively, if we can call it that, moving forward and looking to be like as we move forward?
I think from a government perspective, most countries actually have a very good regulatory process in place. Even a country like Zimbabwe, where there's a lot of sovereign risk and you find companies loath to move in there, it's not the regulatory process that necessarily is the problem, it's the policing of that regulatory process, both from a positive and a negative perspective. That is, from a mining company perspective, by building some of these issues that financiers look at it as a prerequisite to some of the financing that they're looking at, into some of the operational parameters, building it into the operational matrices, policies and procedures, it actually creates a lot of value for them in terms of unlocking the capital, but also brings in a lot of operational efficiencies into their processes. So there's actually a very good case for them to start doing these procedures in their operations.
Well, of course, you know, some examination was also done over the past week on the world-class mining destinations. I mean, how do we compare to those world-class destinations, and what gaps need to be filled as we move forward?
Well, one of the key issues that was addressed in a recent study was looking at the regulatory compliance, and funny enough, not around the licensing issues, but about forming companies within the African continent. And you'll see that very often countries actually lag very far behind some of the other counterparts in some of the other developing nations. South Africa in particular sits very low on that. We're separate, taking an inordinate amount of time to actually register companies. So if we look at how companies can actually start looking at improving their performance, and how the continent can look at improving its performance as an attractive investor, it would be to make it a bit more accessible from a regulatory process. But if we look at some of the challenges around indigenization that we're looking at, you see very similar type of movements in Australia, where 40% tax equates to giving away 40% of a company upfront to local shareholders as well.
Well, of course, this is an evolution that we're seeing unfold here, and it is certainly an interesting playing field. Unfortunately, we're going to have to leave the discussion there for today. Thanks so much, Erik, for joining us this afternoon.